need to decrease the cost, it means we need manufacturing overhead to work in progress, make it credit. We need to decrease the work in progress, right? So this is how we play, with the concept of over and under applied with our estimation and actual one. So here we go, right? So in order to understand the application of overhead and under applied, I have an example here. Let me just first erase all the mess here. Yeah. So let's read this example. So Pierco's actual overhead rate for the year was, so basically this is the continuation of previous examples here. So in previous, we already talked about that our predetermined overhead rate is 4. So let's just talk about that. So Pier's actual overhead rate was 6.5 million and 650,000 with a total of 170,000 direct labor hours. So how much the total overhead rate was applied to jobs during the year using predetermined overhead rate of 4? Let's just talk about that. So we know that we cannot compare this 4 with the actual one. Why? Because the actual should be based on 170 direct labor hours. We need to compare apple to apple. So then we find out what would be the applied overhead rate based on actual one. So we multiply applied with the actual labor hours. So we find out that it is, the estimated would be, on the basis of actual, the estimated would be 680,000. So on the basis of 170,000, so the 170,000 are equal. So on the basis of 170,000 labor hours, we estimated our cost would be 680,000. But we actually incurred 650,000. So tell me, this is overestimation or underestimation? Chandra. Chandra, can you hear me?
Wait, sir. Sorry, what did you say?
I said, what would be the case here? It is overestimation or underestimation?
Underestimation.
Underestimation. Remember, our estimation is higher than our actual.
Yeah. Sorry, overestimation.
Right. So it means we gave the target of 680,000, but in actual sense, our factory workers, they did a very good job and they minimized the cost of 650,000. So this can be efficiency and this can be a negligent and inefficiency on the part of forecasting abilities or the past of manager who didn't forecast properly, right? Then we don't have much information, so we cannot comment on that one, whether this is efficiency or negligence on the part of forecasting authority, right? So we know that this is overestimation, because an overestimation by 30,000. What does it mean? We overestimated. It means this overestimation is already included in work in progress. 680,000 already added here, but actual is 650,000. So we need to remove the effect of overestimation. So we decrease 30,000 here. It means we will be making an adjustment entry, which is manufacturing overhead to work in progress. Manufacturing overhead to work in progress, 30,000. because we overestimated, when we overestimated the cost, we overestimated its product cost, unit product cost, right? In that case, our cost would be, looks huge and profit looks small. But in real size, actually is smaller than one, so we decreases the work in progress with this one. So now we have a quick check. So let's just talk, solve this one together. We have Tiger Incorporation, which had actual manufacturing overhead cost is 1.21 million, and predetermined overhead rate is 4 per machine hour, right? The Tiger worked 290,000 machine hours during this period. The Tiger's manufacturing overhead is, first of all, whenever this kind of question comes, so make sure that the actual hours and applied hours are the same or not. If not same, then you cannot compare apple to apple. Then you multiply 4 with the actual one, not the predetermined one. Since this question is silent, so we assume that the applied and actual, base hours or machine hours are the same. So you tell me, this is over applied or under applied? Ronnie, what is the answer? So what is the answer here?
Is it over applied?
Under applied.
See, we are having a, difference of opinion. So are we sure this is 60,000 or 50,000?
50.
So we are confused, or we have a difference of opinion between A and B. So C and D cannot be the answer here. So what is the actual one, Ronnie?
Under. I was supposed to say under, but I said it wrong.
Okay. Right, so we have actual 121,000, 1.21, and our estimated, what is the estimated one? 4 multiplied by 290,000, how much? It is 116,123.
0, 0, 0. Yeah.
And there is 50,000 difference. So you see, estimated is lower, actual is higher. So we underestimated or underapplied. So this is underapplied. Answer would be B. If you understand that one, then I'm also setting up another breakout room. And all you need to do, it's a very small question. So take a picture. So those who are watching online, please pause the video here and try to solve it by yourself. Okay guys, welcome back after the breakout room discussion. Okay, we would be solving this exercise. So let me put a number of questions here. So it will be over applied or under applied?
Under applied.
Under applied, well done. So if it is under applied, then what effect it will have on cost of goods sold and ultimately on the profit? So Underapplied 5,700, right? 5,700. Underapplied, which is underestimated. So it means our cost is reported less 5,700, right? We should increase our cost with this 5,700. Chandra, Arone, Min, Christine, you're
Yeah.
following my point,
Yeah, we did correct.
right? So when we correct this balance, we add 5,700 to cost of goods sold. What will happen to the profit? It will increase or decrease?
Maybe decrease.
When extra $5,700 is going to be added on the cost, gross margin would be decrease, right? So this is how the working of job order costing works. So first, you receive the order, you gave them a quote, you in advance estimate your manufacturing overhead, and then you make the goods. And when you make the goods, the real data is coming, actual data is coming. You note it down over there. And then you compare your manufacturing overhead actual and manufacturing overhead applied. And the difference is you adjust to your cost. If under applied, then your cost of goods sold must be increased. Is over applied, then your cost of goods sold must be decreased. When your cost of goods sold must be increased, in under applied case, your profit will go down because your estimation is not good, actual is above than the estimation. And if this is over applied, then you did a very good job. Why? Because you think that you applied a higher cost, but your labors and other stuff, expenses, they're very efficient. You resulted in less actual manufacturing overhead. In that case, you decrease your cost of goods sold. When you decrease your cost of goods sold, your profit increase. So that's all from this question. So you see that under applied and gross profit will be decreased. Good. So how this job order costing is implemented in real life. So I'm going to play this a video here. Please watch and listen quietly.
Or most of the costs in our films are labor costs, and those costs are captured through a job cost system. Whether the project is in a very early stage of just being conceptualized, or whether it's actively in production, each particular person is charging